Welcome to Senior Break. I'm Dawn Medici with Oxford Township Parks and Recreation.
And I'm Marie May from Addison Township Senior Center. And today our special guest is David Blatt, and he's with Reverse Mortgages of Michigan, and he's going to clear up a lot of questions that we have about reverse mortgages. So welcome, David.
Yes.
Yeah, thank you so much for the opportunity.
Okay,
I appreciate it.
Okay, can you first give us a little bit of your background, how you got into this?
Sure. Well, I've been a real estate broker and a licensed mortgage lender broker for probably a little over 30 years. Okay. And so I kind of phased from the real estate. I do not list and sell anymore. And phased full-time into the mortgage business, probably almost 30 years also. We're located in Farmington Hills, Michigan, on Northwestern Highway. We're easy to see. Actually, we purchased the Sam Bernstein building about 5 years ago. So we have our own building. We have about 60 loan officers.
Wow,
we're all independent.
So why would I want a reverse mortgage rather than just making a house payment like I have been doing? What would be the benefit for me?
Well, the main reason is, there's a number of reasons. First of all, a lot of people cannot make a mortgage payment once they retire.
Oh.
It's difficult. Their income typically drops, and they're living on 401, withdrawals if they have that, taking out of their pension, and of course Social Security. So in many cases, people need a reverse mortgage just to enjoy their retirement, so they can stay in their house. Many people still have a mortgage when they retire, unfortunately. I mean, I talk to people all the time that are in their 80s and are still making house payments. So if we can eliminate that payment for them, it improves their retirement. They can do anything they want with the money.
Which brings me to who's going to make that payment.
Right, well, and what is a reverse mortgage?
Okay, well, a reverse mortgage, again, it's just, it's a unique way of, again, increasing your income.
Right.
It's insured by the government, FHA, HUD. It is an FHA loan, which protects the bank and the homeowner for not losing any money at the end. So it's like, you understand what a conventional loan is, where you constantly make payments every month.
Right.
And the interest and the principal slowly goes down over 30 years or 15 years. On a reverse mortgage, you do not make any payments. You may, they're optional. Most people do not make any payments at all. So the interest will accrue. So the loan balance goes up slowly every month, where on a conventional it goes down. But there's no payments on it. But in the meantime, though, your equity in your house typically in a good market is rising because real estate goes up basically 3-4% every year in most neighborhoods.
Yeah. Can you have any amount owed on your house? Like, could you have $1,000 or could you have $50,000? Is there a certain amount that you have to owe before they could apply?
No, but there is qualifications. Unfortunately, we cannot help everyone. The basic guideline is your age. You have to be at least 62 and over.
I was going to ask, yes.
Right. We do have products for 55 and over, but those basically are for jumbo clients, and we can go up to $6 million now on a jumbo loan. But for the traditional reverse, which is the government one, it's called a HECM. It's a home equity conversion mortgage. It's 62 and over.
Okay.
And we always work with the age of the youngest spouse. So the qualification is your age and the property value. And it's kind of a software product, a program from HUD. And right now, unfortunately, because interest rates are so high, we're only lending somewhere between 30-40% of the value of the property. So on a $100,000 home value, we're only lending, let's say, after closing costs and everything, about 35%.
Okay.
A couple of years ago, we were up to 60.
Wow.
So the older you are, though, you will obtain more money. That's the minimum. So Someone in their 90s, we're close probably to 70%. Okay?
I kind of lost you. Did you get that?
I'm following along. I have a good idea.
I
Ask
lost
me a
the part
question.
about the 30% instead
Okay,
of.
so again, let's say the house is 100,000 value,
Okay,
and the two spouses are, let's say, 62.
okay,
So we can only lend, let's say, $35,000 on that property. So if they owe more than the $35,000, we cannot help them.
oh, gotcha, okay,
Yeah.
I got it,
Okay.
I got it.
Okay.
Many people think the house needs to be free and clear. It does not. You know, actually, a lot
Oh,
of
I
the
see.
products we do,
Okay.
we're just paying off their mortgage, so they
Okay.
eliminate that payment
Right.
every month. So does that clear it
Yeah,
up?
that cleared it up, that cleared
I
it up.
know. It's a little confusing.
Yeah,
Yeah.
yeah,
Well, this will definitely help people age in
Lots.
place if they want to stay in their home.
That's what it does. That's
Yeah.
really,
Right.
and improve their retirement. And there's no restrictions. It's your money. It's tax-free because you've already made your payments on the mortgage. You can do absolutely anything you want with them, with the cash coming out.
Okay.
You can give it to your grandkids. You can travel. You can remodel your home. You can pay long-term insurance, which is helpful for a lot of people that don't have it. There's no end to what you can do. It's your money. You can do, hopefully, you're careful with it.
Sure. So what if someone goes through this process and are eligible to do a reverse mortgage, but they still owe, let's say, $50,000 on their home? What happens with that $50,000?
Well, it's just like any other conventional loan.
So you're still paying on that?
No, no,
No.
no. We have to pay that off at closing. So the title company will pay that 50 off. So if we go back to the first example, if we only have 30 some odd thousand available on the approval, we cannot help those clients.
Because they owe more
money.
than the $35,000.
Exactly.
I think the question too is, okay, after you pay off the 35, then what happens?
Well, then we
Right?
have a
Because
first
the house
lien.
is worth a lot more.
Yes, the bank has a first lien position.
Okay.
Again, think about a traditional refinance that people do all the time.
Okay,
So in other words, they're going to refinance their $100,000 property value, and let's say they may qualify for $80,000 on a conventional loan, and they owe 50. So we have to pay off the 50, so that's gone, and now they have 80,000 that they owe, and they have additional, though, 30,000 in cash coming out of that transaction. So on a reverse mortgage, the clients can take all cash at closing at whatever they qualify for.
I was just going to ask that.
They could take a line of credit and a monthly, or they can take, just let the line of credit grow. So this is very unique on a reverse mortgage. Most people don't know this. Mostly financial planners do. So let's say the house is free and clear, and it's worth $100,000, and they qualify for $40,000, and they don't want any money. They just want the reverse for protection as they get older, so they do not run out of money in the later years. You know, most people hopefully are living longer today because of advancement in medical,
Right.
and maybe they're retiring early. So that line of credit will grow at the same interest rates as if whatever the loan is. So in other words, say they just took out $10,000 and the interest today is 7%. So the 30,000 or whatever that number is will grow, the line of credit will grow at the same interest rate as the loan does. So let's say in 7 years or 6 years, they'll have twice as much money on the line of credit to draw off, even though the house doesn't appreciate.
Okay.
It's a really tremendous product for a lot of wealthy people are doing that and just letting that line of credit grow. And it might be 20 years in the future, that line of credit will keep growing every month.
Okay. So We are going to have to go to a break, but when we come back, I've got another question about what happens if I pass away, and what do I have to have in place to ensure that that money gets to my estate?
That's a great question.
Yeah,
And
good
most
question.
people want to know that right away.
Okay.
Yeah.
All right, so we'll be right back. Welcome back to Senior Break, and before break I had mentioned that what happens to the funds if I was to pass, and how does that work with the estate?
Okay, let's say there's a husband and wife, or two partners. One passes, there's absolutely no change. One thing that's required on reverse mortgages that it has to be maintained as a primary residence. You cannot take a reverse and turn it into an investment property and leave and rent it out.
Okay.
If you do that, there's a due on sale clause on the mortgage, and that becomes due, and you have to pay off the reverse. So one spouse passes away, it goes to the other spouse, whatever happens, so the last spouse leaves the house for whatever reason, the mortgage is due, and they have to pay it off within 6 months. If they want to keep the house, the family, they may get an extension if it hasn't sold yet.
Okay.
If they want to keep the house, they do have to get a new mortgage and pay off the present reverse bank with a new mortgage. If the house is underwater, which it may be if you take out a reverse today and we have a severe recession, and they may owe more money than the house is worth, let's say in 10, 20 years because of the recession, and they're never making payments. So the family wants to buy that house and keep it, they will only have to pay 95% of the value at that time of the property. If the house is underwater and they don't want it, they just give the deed to the bank, and there's no recourse to the family or to the bank because it's insured by the government.
Okay.
There's a 2% funding fee that goes to the government insurance on every loan that protects the bank and it protects the homeowner, the family. So there's no loss from anyone.
Okay.
Does
Lots
that
of
answer
things
the
you
question?
have to know, right?
It's a lot. It is a lot.
Yeah, there is a lot of misconceptions, and 10 years ago there were some issues people say with reverses, and last 7, 8 years they've really made a lot of corrections to make it really, it sounds too good to be true, but
I
it's
was
all
going to
true.
say that. Yes, sounds too
Yeah,
good.
because you can
It's
still
a
live in your
terrific
house.
product.
Yeah.
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 And you can always pay off a reverse, by the way. There's no penalty.
Okay.
If you want to leave the house anytime and sell it, no penalty. If you want to refinance the house back to a traditional mortgage, you can do that. Also, what happened the last 5, 6 years before interest rates started really rising, interest rates dropped and home values went up. So we did a lot of refinancing on reverse mortgages. You can refinance reverse and get more money. If the house goes up in value and you get older, that creates more equity for the bank.
That's good to
Wow,
know.
lots of things to know.
In our first segment, we were talking about, like, I own the house outright. It's completely paid off. We used the example of $100,000. And I go through this process to do a reverse mortgage. Even though it's completely paid off, there's only a certain percentage of that $100,000 that would come to us if we did a reverse mortgage. Could you explain
Yes.
a little bit more about that? Because why wouldn't we get that full 100,000.
Well, for the same reason, if you buy a house for 200,000 or 100, you have to put some money down. Actually, you don't have to, because on the conventional side, we do have almost 100% mortgages between a first and a second, or VA is 100%.
Okay.
But it's just a matter of protecting the bank and the government that they, again, if there's a recession and the values drop, and you're going to take out X amount of dollars, and again, there might not be equity in the house because no one's making a mortgage payment.
Okay.
So the loan is going up on a conventional loan, like you said, is going down because you're making payments. Where on a
right.
reverse, you're not making any payments.
So tell me again why, if your house is paid off, you would take out a loan at all?
Well, the most
I mean-
important, there's a number of reasons. Let's just go to economics. There's many seniors that are only on Social Security.
Okay.
They need that money for health care. They need it to fix their house up for whatever reason.
Yeah.
Oh, the extra money
They have no money
Because of they're taking some of that equity
and using
to
it.
using
to
it.
use
They're using the
And
equity.
they
Okay.
can't go to a bank because
Okay.
they don't qualify in many cases, or they may qualify, but when you retire, they just don't want to make any payments, period.
So wouldn't that be just like well, you're using your equity though, that's the difference, that's the difference, yeah.
It's really taking your equity, and it's really the most valuable asset a senior has in most cases. And they're using their equity to enjoy their retirement or use the money whatever they need it for. Maybe they have a grandchild they want to help with college.
So if they had a budget and they were short $500 a month and their house was paid off, could they go to you and say, we need an extra 500 income? How much do we have to, how much we have to have, how much of a loan do we need, a reverse mortgage loan do we need?
Well, we
So they
always
could figure that out, then you could figure out for them.
a budget, sure. Well, on all our reverses, we qualify them for the maximum amount they would qualify at that time.
Okay.
And, but they don't have to take it all. So it sits in a line of credit,
Okay.
which grows, like I said. And like you said, maybe they want $500 a month for whatever reason. They just basically, they can go online if they use a computer, or they can call the bank and request $500 a month.
Right.
And that's what happens. They'll receive $500 a month, and it's wired into their checking account for them.
That's
If they
really a
wanna
good
sta-
idea.
If they
And
want to
convenient.
stop it, they can stop it.
Right.
If they want to modify it, they can modify it. But there is an end. I mean, if they, once they use the whole line of credit, it is exhausted.
That makes sense? Yeah.
So they could actually use up all the equity in their house?
Well, they're not using all the
they-
equity, they're using up all
A
the
portion.
mortgage available.
Right.
Okay.
Right. Now, we do have, actually, it's called a modified tenor. I hate to confuse everything, but it's like an annuity. Are you familiar with an insurance annuity?
Yes.
On a pension? It's a little different than the line of credit, but it will go on for the life of the homeowners. They get a little less money, but it will go on basically as long as they're in the house. We do offer that also.
Well, so you could answer all their questions that they would have, because there would be a lot.
There's a lot.
There's a lot to learn about it.
One thing that's important that I haven't mentioned yet or you haven't asked is one of the qualifications on all reverse mortgage is counseling. It's mandatory, and it's a telephone counseling call for the husband and wife or two partners. If they have a family that wants to be involved, which I recommend, that they're also on the phone with a counselor. So everyone asks questions. The counselor will ask questions, also kind of qualifying them financially, making sure that they can still pay their property taxes and insurance and maintain their house. So it's a non-partial, really, counselor. Right now, I use most of my clients either go to Oakland County Counseling, which is no charge, or Green Path, which is a national counselor, and Green Path does charge.
Okay.
So that is very important, the counseling. They receive a counseling certificate. And I really can't do anything until I receive this certificate.
Okay.
I think it's time for a break.
It is.
Okay.
So we'll be right back.
Hi, I'm Peyton Manning, and I'm partnering with the American Red Cross this year to tackle blood shortages. Giving blood's important because every 2 seconds, someone actually needs blood, and unfortunately, only like 3% of the U.S. population donates. So we have to step up to give and to make sure there's plenty of blood available for those in need. Visit redcrossblood.org to get in the game and make an appointment to give.
Welcome back to Senior Break. And before the break, we were talking about the counseling part of receiving a reverse mortgage, that you have to go through this counseling and receive a certificate. Mm-hmm. Do you know what types of questions the counselor will ask the couple or the family to see what it is that would qualify them? And like, are there things that you need to have prepared before speaking with a counselor so that you can answer their questions?
Yes, typically when I receive a call from a client, a senior, they want to know what they qualify for after we go through all the questions that they have. I will actually prepare a proposal for them.
Okay.
Email it to them if they'd like, or mail it to them. And that will go into detail, and it's very accurate, except for we don't know the value of the house exactly. I mean, we do some research on that. The other thing, we do know their age, which is the two components of what they would qualify for. So they do have an idea that they can get X amount of dollars from this reverse mortgage, but it's based a lot of it on the appraisal. It's just like a conventional loan.
Right.
Every reverse mortgage needs a HUD appraisal. And by the way, that's the only out-of-pocket cost for the senior, is paying for the appraisal. All other costs are into the loan.
Okay, so closing costs and things that gets rolled into the loan
Exactly.
part. Okay.
So the counselor will probably go over the proposal, and they'll ask questions. Do you understand all this? I'll ask them again. Questions, do you understand really what a reverse mortgage is and why do you want it?
That's important.
Right, so it is very important. And they'll get into their credit and ask them, do you pay your property taxes on time? You know, homeowners, or, you know, is that something that you can pay, you know, currently all the time? And sometimes they may ask, I think also, do you have any adult children living in the house? We didn't get into that, but there's many cases where adult children are still living in the house with seniors.
And does that affect whether or not you get approved or not?
No, but it does affect, or it's a situation where both seniors, let's say, unfortunately leave the house for a particular reason, and the adult child is not on that mortgage because they're not a senior.
And they're not the age requirement.
Right, and they're not on title either.
Okay.
So that means that adult child, if he wants to keep that house, which he does, I mean, it's willed to him, let's say, or her, he has to get a new mortgage to pay off the reverse mortgage so he can stay there. And in many cases, you run into a situation where the adult child maybe is not qualified to get a regular mortgage to pay off the reverse, or they have issues. So, you know, I always ask that question because I certainly don't want to hurt the family, so they understand what may happen.
Sure, sure.
So,
Wow.
Otherwise, the counselor, again, goes into everything we're talking about. And the main thing is making sure that the financial ability is there to keep the house. Because again, many seniors that are just living on Social Security, really, we don't want to hurt them. They may be better off selling the house.
Then I was going to ask.
And going into an apartment. Again, though, apartments today are extremely expensive. Mm-hmm. And a lot of people, it's cheaper for them to stay in the house.
Sure.
Than go into an apartment. But
yeah.
They just want to make sure it's the right thing for them to do. And they advise them. You know, they don't necessarily kill the loan,
Right.
but they just want to make sure that everyone understands the qualifications and the, what happens.
Sure, sure. So before we got started, David shared with us some benefits on this handy dandy flyer. So I'll have some of these, Marie and I will have a few of these in our senior centers. So if you're interested in this flyer, please stop in and give it to us. But if somebody that's watching the show, David, wants to get in contact with you or has more questions, how do they get in contact with you?
Right. Well, my local number is 248-763-1438, and I answer all my calls. If not, I'll go to voicemail and I'll call you back as soon as possible. The other thing is I have an email, davidjblatt@gmail.com. I look at it multiple times a day. You're welcome always to email me. And by the way, all proposals I give and calls, I do not charge if I can't help the client. And even if they do an application after counseling and the appraisal goes in lower than what we can help them because they just don't qualify if the house value is too low, I try not to charge them for that.
So how long would it take to get the mortgage from when you start with the counselor?
Or start with you from beginning to end.
Yes.
Well, we're usually,
that's good. That's
we
good.
can do it as soon as really 3 weeks to 30 days.
Oh, that's
But
fast.
in most cases, it's probably 45 days.
Okay.
I mean, we need the same documentation as a traditional mortgage. Sometimes, the seniors just don't have it together, so we have to wait on that. Right now, business is fairly slow in real estate, so, years ago, we had a problem with appraisers getting out to the house. It would take 2-3 weeks. Right now, they're out there really in a few days.
Okay.
But it's a fairly smooth process if everyone is working, together.
I think for me, if I kept the word mortgage in my head, because when you put reverse mortgage in front of it, it's like a whole new world.
It is.
But when you think of it as it's a mortgage, like any other mortgage, just about.
Well, the reverse
mean,
comes in where
yes.
you're not making payments.
Right.
Yeah, yeah.
It's reversing, taking the equity out instead of paying down.
Then that, if you think of it that way, it's a little bit easier to get into it,
Right.
I think.
If we have a minute, I just wanted to explain that because what I mentioned to you that we can refinance a reverse. By the way, you can also purchase on a reverse. You can put down somewhere between, depends on the particular age, but 50 to 65% down, where a lot of seniors do not want to make payments. And in many cases, they want to pay cash for their next house if they're downsizing. In this case, they can put down less, never make a mortgage payment again.
Oh.
They do have to pay, though, the property taxes and insurance and homeowner dues if it's a condominium.
Sure.
So
Yeah.
that's
Yes,
becoming more
wow.
popular, a purchase reverse.
Well, we've learned a lot, and there's a lot more to learn.
There is,
Yes,
yes,
a lot more.
for sure. And are you going to be out and about within Oakland County, that if somebody wanted to come see a presentation or learn more? You mentioned something about being in Southfield for something.
Well, I cover the whole state of Michigan. Actually,
Okay.
we're licensed in about 6 states.
Okay.
I'm a partner with K Financial, and we just picked up another license in Florida. But yeah, I'm involved. I don't drive that far, but I only work by appointment, so I can meet anyone at my office or Zoom with them.
Okay.
We do a lot of overnights. I do a lot of business up in the Grand Rapids, Kalamazoo, Traverse City area also.
All
Okay,
right.
very interesting.
All right. So,
Yes.
well, we're almost out of time. I want to thank you, David, for stopping in today.
Thank you so much.
And we'd love to maybe have you back at another time. So maybe we can talk a little bit more about this last option that you just shared with us about purchasing or buying back in. Is that correct?
Yeah.
So maybe we'll have you back and we can talk a little bit about that.
Sure, I'm available and appreciate Dawn and Marie for inviting me.
Yeah.
I
Oh,
enjoy
you're
doing
welcome.
this, and again, I never charge unless we can help people, and
All right.
that's it.
All
Thank
right.
you.
Well,
Okay.
thanks, David. And we'll see you
Learned
next
a
time.
lot. Bye-bye.
All right.